to Fulfillment Key. Today I'm going to be doing a slightly different video. Usually we go over portfolio plays, different stock plays, different closed-end funds, and other kinds of investments. But today I'm going to be taking a look at the Fundrise portfolio that I made a video on actually about a year ago. Or 2 years ago. So now I want to take a look at it and kind of go over it with you guys. For anybody that is interested in investing in Fundrise, they're a new eREIT, as they like to call themselves, where you can buy up tons of different rental properties, which you don't have to be the sole investor in. And it's more like crowdfunded real estate across many investors. So without any other further ado, let's go ahead and take a look at the portfolio that I have, as CyberGhost tries to give me an update. So, of course, I haven't really put much into my Fundrise just because I would much rather buy a REIT, but I still wanted exposure to this new eREIT space. So I put in about $7,500 over the course of 2 years. The first investment I made was about, say, $2,000, and then the second investment I made was about $5,100, both within the span of 6 months of each other. And based on that investment, I was able to get a return of about $665, which is not too great, but I think that Fundrise is able to give good returns. It's just that, as you can see, I put in the other 5K so late that my overall return says 9%. Of course, from a perspective of, looking at it, if I could have put it elsewhere, it's harder to compare. But based on that 2K, if we were to look at the return, it was about 21%, which I'll detail later. This is the portfolio allocation of the projects that are within the eREIT side of things. So first of all, I had a fixed income allocation. They give you like 4 different kinds of allocations in the app. There's a risky one, a growth one. Both of those are kind of synonymous, but there's a balanced one and then a very low risk one. So those are the 4 you can pick from. And of course, like I said, fixed income was 15% for me. Core Plus was 56.1, which is like their core holdings that are more safer. Value add, I'm going to assume is a little bit more riskier than the Core Plus, and the opportunistic are the low return or high return, low safety properties. So in upper coming neighborhoods and things of that nature, and lower priced out properties. So let's take a look at the year over year return. Like I said, they don't have a money weighted return, which would have been very nice to take a look at. What they do have instead is the actual return. As we can see, most of the return is actually from the appreciation on the properties that you're buying your small share into, which I think is kind of interesting. It reminds us, right, of the return of capital that we have within the closed end funds that we discuss on this channel. Of course, they have their little advisory fee. I'm going to assume it's about 1%, maybe less, that they take out every single quarter when they give you a distribution of your dividends. And we look at the reporting NAV returns, we can see that, of course, I invested kind of mid 2020, a little later, so I got 3.2%. And then in 2021, I got 19.1%. Now my 2022 year to date is 3.7%, leaving us with 9.8% all time. Of course, if you were to look at this from a perspective of a broader sense, of course, it might make sense to invest in stocks. But again, like I said, I just wanted the exposure to the eREIT space, which is why I picked Fundrise. So like I said, my cost basis is about $7,100, and my return is about 9.4% overall, given my total account value and what has been, returned to me in terms of a distribution or capital appreciation. And that 9.4%, as I said, is not reflective of, the time of when I made those, contributions into the account. So now that we've covered that, let's go over my thoughts on it. These thoughts, I've written them up a little earlier, but then I had kind of realized into making this video that I put in the 5K a lot later. So the return is not going to be, as good because of the time span. But it seems like a very, a safe way to put your money in and not have it go down. It reminds me of this other thing that I heard of the other day called Rad Diversified. If you guys have seen that ad, oh my God, it is annoying. But everybody says we haven't lost money with that company. I haven't looked into it. Maybe you guys should. But I think Fundrise is kind of the same thing. You don't lose money, but you also don't gain a lot of money. But it gives you exposure to a lot of private, projects that they're developing in different areas across the United States and maybe even outside of the United States, but mainly the US. And when I look at it from a perspective of, like I said, REITs, if I had purchased RQI at the same time that I put my money into Fundrise, I would have made 50%, and I would have had a 10+% dividend, and they pay monthly. So looking at it from that perspective, it's also kind of, you know, in that 2020, if I had taken that 2K and put it elsewhere, what I could have done. But like I said a little earlier, it's really good for minimizing the risk and the loss of capital. But if you pick the balanced investing, you know, style that I picked, the returns are more to, like, you know, preserve your capital than to really just have them grow like crazy. And I'm going to presume, this is just a guess, I'm not a financial advisor, do your own research, blah, 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 blah. But I'm going to guess that if you use the growth package that they offer, it's going to, you know, you have the potential of losing more money than if you use the balanced, where I haven't lost any money. So all in all, here are some of the projects that they show you. I think this is interesting because you can actually see the addresses and see the properties that they're developing using your capital. So we see we have like a single family rental in Florida, new apartment in Florida, stabilized apartments in North Nevada, Las Vegas, Nevada. We have a stabilized commercial property in Tempe, Arizona, Houston, Texas, Jacksonville, Louisville, Panama. You get the idea. They are actually show you all of the projects that they're in, which is pretty interesting and nice to see. Excuse me. But all in all, if you guys like this video, make sure to subscribe to the channel. I'm always making new content to try and get you guys to build your portfolios better and have you make more money in terms of your investments. And like and comment if you guys have any questions. But that would be all for today. Happy fundraising, guys. Cheers, and make sure to subscribe. Have a good one.